Hi and welcome to the Market Alert for Monday the 21st of February 2022. So Friday's headline was gold source credit cracks stocks sink as Putin, Powell and the President pontificate. A week dominated by headline chasing algos. The reason I mention this is because overnight that we've moved on from this. The pontification has changed to futures surge after Putin accepts Macron proposal for Ukraine summit with Biden. So we'll have to wait and see if this actually comes off. But obviously this is bullish for stocks. It's bad for metals, bad for the dollar, and that's the way it will remain unless, of course, we get a headline coming out later in the morning saying that Putin cancels meeting with Sir Biden, and then we'll see everything go the other way. But at the moment, that's the way it's looking. Markets gapped lower and moved higher. Talking of other news as well, it's President's Day today, so markets have limited hours as well, which will help, of course, with moving the futures market to the upside and also stocks if Putin doesn't cancel his meeting and then invade Ukraine on President's Day. You just don't know, do you? Other news this week, economic news, not a lot to report. Today is the flash news, which is a real pain in the rear, because that is subject to news every 15 minutes or hourly, etc. So the only one that isn't being released today is the US flash news, which will be released tomorrow. There's no major news events this week, no CPI, no non-farm. Bailey's out on Wednesday. That's about as much as I can see at the moment. There's not a lot there at all. Apart from that one on, we've got a policy meeting report hearing. Okay, let's have a look, see where we are markets wise for overnight. The Dow, you can see in the daily chart, has gap lower down at the 89%, 78%. Remove the 78% off there because it gapped in between the two and is making its way back to the upside at the moment. The question is, how far will it go? So I'm going to measure from here down to the gap, and let's see where the market is projecting to the upside. These are the upside targets for this market. It's got to take out the 5-bar moving average as well, which ties in with the 50% retracement, but first having to also tackle the 38% retracement in the Dow daily there as well. So I'll keep those on there. Have a look later on this morning. Here you can see the gap being created, and then the market doing its retracement down to the low. Market loves the low, oversold, and wallop straight to the upside. And we're actually up on the gap to the current high of 356 points there. So the market moving up quite nicely on the futures market at the moment. I say on the news more so than anything. It looks like it's stopped at the 89% retracement as well. No, it's just got through there. So that's good news as well, which leaves the market free then to draw in another second set of fibs, despite the fact that we have divergence coming into the market at the moment and the market being overbought. Let me just remove this one. So they're the next two upside targets. When the European markets kick in at 7 a.m, likely to move the market higher, despite the fact that we've got a bit of divergence there as well, indicated by the red lines. But that's likely to be the case first, is to continue to move the market to the upside. The market still closing above the 5-bar moving averages, can be seen by the green bars in the MDI and the green parabolic as well. So that, like I say, just because something's overbought doesn't mean to say that it's going to reverse and move straight down. At the moment, the market is still indicating and showing that it's moving to the upside. That will change at some point during today, but at the moment, ahead of the futures opening in Europe, the market is moving to the upside. Speaking of Europe, let's have a look at the DAX. This too gapping down right onto the 89% retracement, drawn from there back down to here. So again, what I'm going to do is to go to this high. I can't actually quite get to the low of this because in the software this low is not permanent until after midnight of the trading day. So the only thing that I can do is come back to the low of yesterday. This is the only issue when we have a gap, but it still gives me a pretty good idea. And if I want the exact figures, then all I have to do is come down to the 30-minute chart, and I can draw this in precisely because the low has already been left behind. So for starters, I can see that this line here is at a BRN, and it is likely to get through this come 7 a.m. So I'm going to go up to this one where the market sold off on Friday, and draw this in. I could actually go to the precise one in the daily chart as well. If I actually go back to the daily chart here, I could come all the way back to this date, which would give me the 16th of February to draw in those numbers. But I don't need to do that because I can draw them in as the market moves to the upside. But if I wanted to do so, just drag the chart across and find the 16th high, which is here, and I could draw in from there to that low. I could also switch up and use a bigger time frame as well. Could go to a 60-minute or a 4-hourly chart as well. But given the market too has also moved, as we can see, 100, nearly 200 points in the pre-market session, then I'm quite happy to just use these points here as the market moves up. So we'll just draw those in. We can see that we've already gone through 38.50. We're at 62 at the moment. These are the other areas of resistance, and by the time the market's gone through this, we've got 100, 200, and if we get to the 89, we'll have done 300 points on the DAX, which is a significant move. Meanwhile, on Friday, we started off with the market being oversold and a divergence in the pre-market session, the futures market trading down to the DP. We can see how this was held with the volume. The market was brought back. It then became overbought with the crossover in stochastics. We then turned red. The market traded down to the DP, and then we traded sideways until we had news of what was the actual news. Let me just grab it for you. I've got it in here, so let me just there we go. Yeah, stocks tumble after Donbass separatists announced evacuation of women, children to Russia. Amazing, isn't it? How that news item came out of nowhere, sent the market south by a couple of 100 points, and then we've heard nothing of it since. And also over the weekend, apparently Putin had completed his nuclear testing on Saturday, was the headline on Sky News on their website, and then it was taken over by the Queen catching COVID, or having COVID yesterday, and it's all just disappeared. And now we've got the futures moving higher because Biden is proposing to meet Putin after it's all been taken care of by Macron. Amazing. But anyway, the market, it came down, it oversold. We had demand, which is the usual thing. We have the BRN, and then we get the crossover. The market trading up, we get the market overbought, and then we see the market moving down. And then if you look here, this is how this works. We've got the market from here up to here, trading back to 78% retracement. So from there back to there, where we are once again oversold. For the market then to be oversold, to trade back up to 89%, to more or less overbought, before the market then reverses. But before it reverses, we go from there down to there, and we go back to 89% there, before the market then heads south with the Dow late Friday afternoon. I've also added into the website a couple of more trades as well. There's from Friday, there's one there, a 50-point trade, and also the adding to the silver positions, which I've done, but I have a funny feeling I will probably be stopped out of this one today, given how they're hammering the metals, which we'll look at in just a moment. But here you can see the gap there in the daily chart. We gap down to 89%, and that's beautifully shown here in the 5-minute chart, as you can see there. So the market trading sideways, which you can see there. The big gap, obviously, to begin with, the volume then tapers off. the momentum starts to change to the upside, and then woof, up we go. The market moving high. Now it's interesting because this gap obviously was set up on the basis that everything was turning to wreck and ruin with regards to the war over the weekend, and then all of a sudden this announcement comes from the news media, Macron intervening, etc., and that sent the market up. At the moment still continuing to do so as well. So I should be using the 30-minute chart to have a look, see where there's any sort of exhaustion or there's a pullback in the futures to then take advantage to the upside if that's what it presents, with an oversold situation for the long side and overbought for the downside. Quick look at the currencies. I'm saving the metals till later. We've got the JPY still sideways but holding above the 5-bar moving average in the daily chart, just coming up to the 89% retracement as well there. That's been drawn in for some time. And yeah, just sideways to higher. The dollar lower, which you'd expect. And in the pound, sorry, this is the pound, not the JPY. Sorry, got it wrong there. It's the GBP/USD. And then here we've got the JPY. I thought it looked a bit odd. We've got still a few red bars in here, but trading sideways to higher again. And wouldn't be surprised to see this moving to the upside, given that the dollar is moving lower because the threat of war at the moment is off the table. So yeah, JPY Friday market moving higher, became overbought and then sold off for a few hours. Little bounce there after being oversold, and then trading down, making a new low, which we see in place there at the moment, where the market's found support after being oversold there at the low. And demand, if I just compress the chart a bit so I can see this. So we've got demand coming in, as well as the crossover, all of the usual suspects that you want for a potential long, and then the market up, trading straight to the DP level and stuck at the 200 MA at the moment. So a bit of resistance to get through there. And like I say, in the pound sideways and in the 30-minute pound, we've got a similar thing where the market is also oversold at the close. Not a lot of volume though, but we get the crossover in stochastics there as well. But we also get a fib retracement of 89% as well in there, which I can see before the market then moves to the upside. And as it's moving higher, from here down to here, you will see the market approaching 78% retracement as well. Quick look at the metals. Like I say, being hammered at the moment, no surprise there. Any excuse to move the market lower. We are overbought as well in the daily chart, so due for a correction. So let me just mark up some downside areas in this. At the moment we're stopping at the 38%, but these are the other areas of support or potential support if prices continue to move to the downside. Today is a great excuse to do it. It's President's Day and the negotiations or possible conference with Biden and Putin. So I'm expecting quite a serious hammering in the metals today. At the moment it's finding support at the low. Wouldn't take a lot to break it. We'll soon get through the 23.50 areas, and then down to $23 as well, which wouldn't be unheard of because there's a bar there, there's a bar there, there's a bar there. You can see them all the time. We have to get to the 1 p.m. fix, don't we? And that will take care of it. Unless, of course, the news changes and Biden, Putin pulls out of the conference. But that's where we are with silver. Gold, the same, being moved to the downside as well. And the dollar also moving lower with the metals because the war effect is off at the moment. This contract expires shortly as well. Where are we? 21st of February. I know we've got a couple of weeks yet on the dollar March contract before it expires. Oil also down on the overnight as well. Up on Friday, down on today's. And the gold-silver ratio, for those of you that are interested, let's just have a quick look. We should see silver go heading back towards the 80, and that's precisely what we're seeing there as the gold price starts to move slightly lower. So no surprise there, because silver will always drop faster than gold. That's the way it's always worked. Okay, that will do it for this one. A bit longer than I expected, just for a quick roundup, but a lot happening. So let's see how things pan out on this President's Day for February 2022. As ever, thanks for watching. See you in the next one.